Hello and welcome to another update video. Today we want to talk about render token RNDR. A lot of requests for it. It's a coin that I will not update regularly, but still, from time to time, I of course focus on channel member requests, whenever there is a bit of time. I already posted that a few days ago for channel members on Discord and Telegram anyway. There was the idea that this could develop as a leading diagonal. A fifth wave was missing. We now have that fifth wave. The problem is when you have a subwave structure like that, massively choppy structure, a lot of overlaps, very corrective price action, then yeah, surely, you can look at this from a bullish point of view, but then it could really only be a diagonal pattern, which it looks like it is. So we now have 5 waves up. But we should not expect the support area that's been defined here to hold. The reason is that it's not an impulse, it's a diagonal. Diagonals, but just by the very nature of what they are less reliable. I would like to see an impulse rather, but we don't have one. So we have to work with this, which means we should not be surprised if the support area in the end breaks. So the idea is that somewhere here, we're going to complete a wave 1. Which is a diagonal pattern, a motive wave indicating the trend could have shifted to the upside, but it's not high confidence because such a diagonal pattern could also just simply be a correction. Due to the overlaps, it can easily be counted as corrective wave structure. If we have a corrective wave structure like that, it would make a new bear market low. But because we can count 5 waves, even if it's only in a diagonal, we can be watching if a possible wave 2 support is holding. And that area has been defined as 76.9 cents to 138, between the 78.6 retracement and the 50% retracement. So this needs to hold to give us a third wave, a reliable third wave to the upside. And looking at this, if we want to look at, how high can this move actually go? So first of all, it's very difficult because we're dealing here with a diagonal. In diagonal structures, these subwaves are very, very difficult to forecast. We can add here a trend line, and you can see that this develops something like a so-called ascending wedge pattern. An ascending wedge is typically a pattern that can give us a warning that it's getting exhausted and that it will break down at some point. That would make perfect sense from this analysis point of view, where we have 5 waves up and we're looking now at a possible wave 2 correction that could start at some point. Not guaranteed it will happen now, because to be honest, we still have some room to go. If I just connect these 2 waves here, it's very hard. It's not very well defined, that trend line. I'm just highlighting here because typically in such a diagonal, you get this ascending wedge shape. You can justify it, I think, but it's not a very firm trend line I would watch. It's just something, maybe to observe, but not necessarily to expect that it will get rejected here. But in a diagonal like that, to be honest, it looks like to me that wave 1 is obviously the shortest. Wave 3 is longer than 1. So it would make sense to expect wave 5 to be even longer because it might develop into a so-called expanding diagonal. It's very hard to say. The only rule really is that wave 3 should not be the shortest. But if we expect wave 5 to be at least the same length as wave 3, again, it's not a firm rule, but it would need to reach at least 266. 266 would be some kind of resistance here. Bear in mind that we're approaching this sort of resistance area here now anyway, between this swing high around 324 and the $230. You're basically where we are, between this swing low of the 7th of March and this swing high around the 28th of March. There will be resistance. There isn't much left before. And I think if we get rejected, there's a good chance to get rejected in this region. So we're now heading into resistance. We have a possible 5-wave move up nearly complete. At present, when I make this video, there is not a strong evidence the move up is complete, but I think we're getting there because we are obviously approaching that sort of 1-to-1 ratio with wave 3. We can see on the weekly chart a bearish divergence, higher highs on the price chart and lower highs on the indicator, the RSI. Looking at the daily chart, we also see here a bearish divergence, okay, between this high and this high. Okay, so we see it, and that is typically an indicator. And even if you make it a bit larger, you see it between these two swing highs as well. Bearish divergences. It's just pure, strong warning that things could be changing, that we might face a reversal to the downside. So I would just be on the side of caution here, and just be watching here, because let's be honest, what is key support? I mean, you could get away with saying key support is this trend line, but it can drop quite a bit before it will break the trend. So it just means that risk is increasing for anybody who's positioned here on the long side. So just come to your conclusions, what that means for you. Do you want to lose it all, and do you want to wait for confirmation that the trend is breaking? Because when you have confirmation, you're already nearly in the yellow support area anyway, which would then most likely, or at least based on this wave count, lead to a trend reversal and a rally in a third wave. Alright, that's my update about Render. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.